Hello friends, welcome to Prashant Awasthi official. Friends, when it comes to building a house, the very first question that comes to our mind is where will the money come from? Such a huge amount can only come from the bank, and that is why we take a home loan. A home loan usually takes 20 to 25 years to repay, and only then does the house truly becomes yours. But just imagine, what if your home loan becomes absolutely free? Surprised, wondering how this is even possible. So friends, in today's video we are going to talk about exactly this, how you can make your home loan free. This video is going to be very important, so make sure to watch it till the very end without skipping, because I will share with you the complete details of how you can practically make your home loan free. And yes, I have one small request. If you are new to the channel, don't forget to subscribe, like the video and share it. Your likes and share motivates us to keep making more such videos. The reality of a home loan, friends, when we think of building a house, it requires a huge amount of money, and not everyone has that amount ready at once. That's why most people in India depend on home loans to build their houses. But the problem is, once the house is built, people end up paying EMIs for 20 to 25 years. While you get your home, your entire life goes by under the pressure of EMIs. Now let's take an example. Suppose you buy a house worth rupees 1 crore. The bank charges you an interest rate of 8.5% for 25 years. Your EMI will be around rupees 80,523 per month. The total payment to the bank after 25 years will be about rupees 2.42 crore, but out of this, the interest alone will be around rupees 1.52 crore. How to make your home loan free? Now the big question, how do we make our home loan free? Well, the answer lies in mutual funds. While you are paying rupees 80,523 per month as EMI to the bank, if you simultaneously start a SIP in a mutual fund, then by the time your loan ends, you would have created a much bigger wealth for yourself. The fund we are talking about here is SBI Healthcare Opportunities Fund, managed by SBI, India's largest mutual fund company, with more than rupees 11 lakh crore under management. Why this fund? Because healthcare is one of the fastest growing sectors, with rising diseases and higher medical expenses. Healthcare companies are expected to perform very well in the future. This fund invests in big companies like Sun Pharmaceuticals Limited, Device Laboratories Limited, Max Healthcare Private Limited, Cipla Limited, Lupin Limited, and in total around 31 healthcare companies. Past performance of SBI Healthcare Opportunities Fund in the last 1 year, it gives a return of 4.6%. The market went through corrections. In the last 3 years, it gave 26.6% CAGR, compounding annual growth rate. In the last 5 years, it gave around 21% CAGR. Since its launch in January 2013, the fund has delivered an 18% annualized return. Of course, since it's an equity mutual fund, it falls under the high risk category. The expense ratio is 0.91% direct plan and 1.93% regular plan. There is no lock-in period. Two, if you withdrawn within 15 days, there is a 0.50% exit load. After 15 days, there is no exit load at all. The current NAV is rupees 496.74, and the fund manages an AUM rupees 3,963 crore. The calculation, SIP versus EMI. Now let's see the calculation. How a SIP can make your home loan practically free. We are assuming the fund continues to deliver its long-term average return of 18% CAGR. If you invest rupees 8,000 per month for 15 years, your total investment 14 lakh 14,000. Expected return rupees 49 lakh 68,000 rupees. Final corpus 64 lakh 8,000 rupees. If you invest 8,000 per month of 20 years, your total investment is 19 lakh 20,000 only. Expected return 1 crore 34 lakh. Final corpus rupees 1 crore 54 lakh rupees. If you invest rupees 8,000 per month for 25 years, your total investment 24 lakh rupees only. Expected return 3 crore 36 lakh rupees. And final corpus rupees 3 crore 60 lakh rupees. These are expected return, not guaranteed. They may be higher or lower depending on market condition. Home loan versus SIP wealth. Now see the comparison. On one side, with EMI, you pay rupees 2.42 crore to the bank over 25 years. On the other side, with just a small SIP of rupees 8,000 per month, you create a rupees 3.60 crore of wealth in the same time. That means when your home loan is finally over, you don't just have your house, but also an additional wealth of rupees 3.60 crore. Effectively, your home loan becomes free. Final thoughts. Most people see a loan as burden, but if you invest smartly, that same burden can turn into wealth. Don't just keep paying EMIs. Start SIPs alongside. Let compounding work for you. And after 25 years, you will not only have your home, but also crores of rupees in wealth. So the next time you take a home loan, don't see it as a headache. Instead, start SIP and make your home loan practically free. Disclaimer, this video is only for educational purpose. We are not giving any investment advice here. Investments are subject to market risk. Please read all scheme documents carefully and consult your financial advisor investing.